Hello, everybody. Welcome back to Honey Never Sleeps, a podcast all about sales, marketing, and just business in general. I'm the host, Ben Bagg, and I'm joined by Kevin Brockland from Indelible Ventures. Kevin, introduce yourself.
Thank you very much for having me here. Very excited to jump into some questions and give a little insight on the background of Indelible, the funding ecosystem here, and whatever else we kind of deviate into.
Yeah, exactly. Obviously, I've always bootstrapped businesses, so I'm really excited to kind of get to know about the ecosystem here as someone who may be entering soon.
Sure.
So maybe give a sort of whistle-stop journey of you so far that the audience know a little bit more about you, Kevin.
Yeah. So I mean, I'll try and keep this a little bit brief. My initial career path when I joined university was I was going computer science. I thought I was going to be a computer science major. I thought I was going to end up being a programmer because I was always more quantitative, logic driven. Mm-hmm. Back in those days, it wasn't as sexy to be in computer science as it is today. And so I ended up switching and going into finance, which is also driven by numbers, logic, etc. When I came out of my MBA, I was originally anticipating and going into structured products and a lot of things that essentially collapsed in 2008. All of like the very complicated structured products during that time period. So I did a short stint on Wall Street. Then I moved over to a company called Tiger Capital. Did that for a handful of years. That was in the distressed asset space. Moved from that one, instead of doing the downside of business, I moved into a emerging market private equity fund that had 17 funds across 19 countries. Did that for a handful of years, but I always missed getting involved with the companies directly and getting earlier stage, getting much more into the weeds. So I left that one, took on a smaller role as leading the region in LATAM for another global fund. Shortly into that time, the person that was covering Asia went on maternity leave. And so since I had experience in Asia, I raised my hand and said, don't worry, I'll take over while she's gone. And then she never came back to take it over. And so I was doing both sides of the globe for about a year, where essentially I was the only person in each region on the investment team. Yeah, I just said, okay, I need to choose a region because I can't do both of them justice. So I ended up choosing Asia. I landed in Malaysia really because of a pragmatic justification. I said, I need two things. One is connectivity of the airport, because I travel a lot through the region. And so Malaysia is quite good for first tier, second tier, as well as third tier cities because of Malaysia Airlines and AirAsia. Mm-hmm. The second thing was cost of living. I asked for a number, didn't quite get to the number that I wanted for cost of living adjustment, so that marked Singapore off of the list.
Yep.
And that 1 hour flight is pretty easy to hop over when needed.
Yeah, day trip.
Yeah, and then I just got very absorbed into the ecosystem, trying to volunteer as a business coach, a mentor for a lot of the programs. And then because of the systemic flaws in the system that I saw, I thought it would be good for me to launch my own fund, my own VC firm, and focus on filling that gap, which the most blatant gap in the funding ecosystem is at the very, very early stage. And that's kind of what led to the beginning of Indelible Ventures.
Okay, I feel like you've covered your spark then. That's kind of what I was going to ask you, kind of what convinced you. So
yeah,
kind of maybe tell me a little bit about those flaws that did crack that spark for you to get into early.
Yeah. So I always say that Malaysia doesn't lack talent, right? The challenge is the retention. So if you look at the entrepreneurial talent, and let's talk about funding specifically as opposed to the opportunities. So on the funding side specifically, when you're at the very, very earliest stage and you need like friends and family or grant money, there's available pockets of small amounts of funding. You can get 100K ringgit, which is basically $25,000.
Yeah.
But that's not going to get you very far. The next available capital, there's this big gap over where normal seed stage would be. And there's not really strong availability of that capital. But once you can justify raising multiple millions, it becomes much more readily available that investors would be willing to cross borders for small checks. And so there's this big gap in the interim where it's just very difficult for some of the entrepreneurs to end up raising capital in this pocket. And so That's kind of the area where we saw the biggest need case. And also being able to position the companies to where they would become attractive to those international investors. Because Malaysia is a great place to test out your product market fit. It's a great place to test out your go-to-market strategy, but it's far too small of a country in order to be an end destination. And so it's a testing bed, not a ending point.
Yeah, kind of a place to begin to springboard to, well, the rest of the Asia region as well as the globe, right?
Yeah. Definitely.
Yeah. So there's a lot of things that you were talking about online. You talk a lot about the three Ps, people, process, and product.
Yeah.
Tell me more about that.
So this comes down to how I assess the opportunities that are interesting for investments. Okay. And so, the first thing is really to get the foot in the door, there needs to be a large enough market opportunity. And it doesn't necessarily mean with the product today, because the product that a company has today is not very likely to look the same in 5-7 years, right? There's a drastic change. Yeah. But I have to be able to envision some sort of a evolution to where it'll be large enough market. Kind of building up that storyline to get excited about the size of opportunity, right? Because ultimately, a VC needs to take risk in order to account for the failure rate that is the natural aspect of this industry. So then it comes down to the three Ps, the people, the process, and the product. And normally people ask me, why does the product come last? Because it's in order of importance, right? And so the last one is the product. But I already said it just a second ago. The product of today is not going to be the product of tomorrow. So the only way that you're going to evolve is if you have good processes in place in order to collect feedback, to have those flywheels in order to grow, revise, iterate, and expand, right? And the only way that you're going to put in good processes and interpret those processes and be able to be flexible enough in order to evolve with them is the people. So it kind of works back, especially at the early stage. At the later stage, good people is basically table stakes. If you've made it to a B round, it's assumed that you have good people. It would be very unimaginable to survive to that point if you didn't have.
And then you've got the systems to be able to grow to a point where you can raise it.
Right, exactly. Exactly. But in the early stage, there's not a lot of history. There's not a lot of data. You're really going off of, are these the people that do it? Some aspects of traction, sure, there's some numbers, but it's very heavily weighted on those people.
Yeah, and I guess it's sort of, are they going to be able to survive as well? Because I mean, I've been an entrepreneur now myself for, I would say, 3.5 years. And then when I was much younger, I tried a few little things which completely failed. But it's probably the most difficult and exciting thing I've ever done in my life. But I don't think it's for everybody. You may have an idea, you may start, but it gets hard. There are times where maybe payroll gets scary. There are times when you have no idea how to solve a problem. So I completely agree with what you're saying.
It's a certain personality type that can endure. And I want to emphasize the endure, because it is, as you said, it is very difficult to build a startup. I don't think I've ever met an entrepreneur that's had an easy time. Even the success cases that you'll see out there. You talk to a unicorn founder. It's not all sunshine and rainbows. It's difficult. Yeah, because they jump to the end of the story. They take the first chapter and they take the last chapter and are like, okay, happily ever after. But they miss all of the ups and downs of the plot twist.
Yeah, definitely. And people can make so many mistakes. I've made countless. Can't even imagine how many I've made. Before I started to figure things out, I actually got a business coach. I invested in a business coach.
Business coaches are great.
And this guy, my coach, is actually in the UK.
Okay.
So much more expensive than if I was hiring someone in Malaysia. Sure. But I did that as a way to make it painful for me so that I would bloody listen. And it was all about processes, systems. How do we get this moving? How do we track the data? How are we managing the business and getting from working inside to working on? And that was invaluable.
But all of those implementation of processes required a good person in order to manage them.
That's very true. That's very true. People first. So when you're looking at people, how do you determine if they can do the endurance? So let's say it's like they're at the early stage, they're just beginning, they've not got a track record.
Yeah.
How do you figure that out?
I got to be honest with you. I'm still trying to figure it out. I wish I could say that, like, that I had like it down to a science. But like, I know people out there that love to give the psychometric exams and do all of those kind of steps in order to assess the founders. And they're useful. Don't get me wrong. I don't want to knock it, but like, it is challenging, especially when in some funding ecosystems, everyone's in sprint mode and moving fast. In Malaysia, there's not as active of an ecosystem. So if it takes you a month or 2 months in order to issue a term sheet, most people are moving their funding much more in advance. So they're not on such a tight deadline. Whereas in other funding ecosystems, there's 10 term sheets at a founder's desk and you have to move fast in order to be the one that gets it. So when you have to move that fast, you sacrifice some of the due diligence on the individual because you don't build up the relationship, you don't build up that personal connection side to where you can see how they react over a little bit longer of a period. And obviously, it's easy if somebody comes from a personal network that you've known for a couple of years because you've seen them for an extended period of time. Yeah. But that's just not how things play out at scale when you start incorporating more and more companies. And so I do usually tell founders that I don't move fast because I want to get to know them and see how they evolve. And sometimes I'll look at the numbers and say, I think you guys need to increase this number or this number, and then see how they react, how they take that. I'm not always right, so I oftentimes will say things, and if they disagree, it's always interesting to hear why.
I think that's the most interesting part. Because I've had people I've worked with, clients, where I've disagreed with them and they haven't been able to articulate why not. Some of what we do, for example, the campaigns that we run from the marketing side and developing websites and so on. I've literally gone into meetings and looked at people's sites and they've been really proud of them. I just said, this is awful. I explain why, and then they disagree with me, but don't explain why they disagree with me.
Right.
And those are the most difficult people to deal with because they're not willing to take criticism. So I guess if they come back to you with a solid why and a good reason, you're like, okay, they can articulate, they can solve problems, they understand things a little bit more detail.
Yeah. I mean, there's an aspect, and I can't remember who coined the phrase, but it's a person out there, I can't remember who, that uses the phrase perpetual learner. And so that's kind of the personality where they're open to hear, they're open to evolve, but if they disagree, they're willing to state why.
Yeah.
And it's okay to say you disagree with the investor. At least for me, it's not going to like cut it off. If you give me a good answer of why I'm wrong, it'll impress me actually. And you convince me why I'm wrong and show me the logic or the data or whatever, that gets points in the book. And so I don't think people out there should be afraid to demonstrate knowledge or whatever, because at the end of the day, the insider, the one that's running the company, should have an information asymmetry and should be the one that's educating me, because I can't be the expert on every single thing. I'm more at the tree level, right?
Yeah, so if we just move a bit further down your journey, you've been doing this for a little while. I think your portfolio, how many you have now, like 7?
Yeah, we've got 7 right now. Hopefully by the end of the year, we end up hitting 10 to 12.
Okay, cool. So you're obviously actively searching. So what would you say has been your most memorable moment since you went out on your own and started your own fund?
I mean, that's a good question. I don't think it would actually be on the investment side, because I've been doing the investment side for essentially the majority of my career. Striking out on your own, you have to take on the opposite side of the fence and go out and say, oh, who's going to put their faith in me directly,
the right decision,
as opposed to the organization that I'm working at. And so getting that vote of confidence was probably the highlight. It's like when you're a startup and you get your first customer and you get that first revenue and you're like, all right, this is why I ended up doing it. Similar sort of story, because essentially anybody that goes out and strikes out and starts their own fund or becomes independent, you're an entrepreneur one way or another. Whether or not you're the one that's trying to invest in the entrepreneurs, it's still a business, and you need to grow it, you need to fund it, you need to demonstrate positive results, etc. But that first point of getting that first vote of confidence is generally the biggest first highlight.
I think many people don't realize that. Like those small deals, those first little wins mean more than those big wins later on.
Yeah, because those are the ones that set the wheels in motion. And so you needed those first little successes in order to be able to get those. So those fed into it. So it's kind of what came first.
Yeah. So what's the biggest difference from before that you were working for other people, you were helping their businesses grow and their funds work, right? Now you're doing your own. What would you say has been the biggest difference, and what has been has there been any big changes that have happened to you since you've made that shift?
Yeah, I mean, I don't think there's anything that would be dramatically different than any other entrepreneur that ends up going off on their own, because most people a lot of entrepreneurs are not very good employees. Let's be honest. Like, there's this characteristic where like you either want to be in control, or if something's broken, you have to fix it. And if the mechanisms of whatever company you're in don't enable you, you can end up getting frustrated and wanting to set it right. And so it's not drastically dissimilar. So there's no capability of being able to complain about a boss anymore. You have to stand in front of a mirror, look at yourself, and be like, "This is your fault," which is a positive and a negative. But the positive far outweighs the negative of it, right?
How did you find holding yourself accountable?
I mean, I've always been in roles where I was given a little bit more autonomy. Prior to launching my own, I was the sole person in a region. And so like I've always had a bit of autonomy in my role, other than when I ended up having to go to investment committee or taking things up to the management chains. Yeah. And so the biggest change is now the discretionary authority. I have responsibility to the people that have entrusted me to then find opportunities, etc. And so now the only faces that I have to go to are not somebody that's that middle layer of management between me and the ultimate sources of funding. Now I'm directly responsible, which is a much better feeling, to be honest with you. It's good. It's good to be in those shoes.
Yeah, no, I completely agree. And taking Malaysia, obviously you're here. You from what I saw, you're typically investing in companies in Malaysia.
Yeah. It's not contractually required, but I do have a bias towards that. And because it's overlooked, there's a bit of a supply and demand dynamic where if you look at markets that have an abundance of capital, the valuations can end up being quite high, where in my mind, they can be justified, but to a certain extent, but also it's challenging in order to impact those risk-reward dynamics. Whereas when there's a deficit of capital, but there's still a lot of opportunity, the valuations on very good companies can be slightly lower than what you would see in other markets. And so I've termed it the Malaysia discount, not with any intention of derogatory otherwise, because I see it as a very temporary sort of thing. It's not going to last forever. We just need to prove that there's more success cases. We need to change some of the default assumptions about the Malaysia startup ecosystem in order to solve that. Eventually it will disappear. The more a company grows and becomes international, they start getting priced on an international basis.
Yeah, especially if you can, there's a lot of markets nearby, but I think if you're getting outside of Asia as well, if you're able to get traction in the US and in Europe, that's obviously a big selling factor.
Right. I mean, I look primarily at B2B companies as well, and they're predominantly global by default. And so we were really looking at regional or global companies primarily, not really interested in something that's solely relevant for the domestic market.
Yeah. Likewise, absolute focus on B2B have been my entire career, and especially with Nectar, I don't touch anything B2C. What we do is we actually help companies come to Asia or grow inside Asia. And we've been doing that because there seems to be a lot of opportunity to grow, lots of markets that are growing quite quickly. And I think companies are starting to realize that a little bit more, especially sort of startups. At a certain stage where now it's like, how do we do proper global expansion? Yeah. What's been
there's a couple of interesting things on the dynamic of the region specifically. So historically, it's been a relatively low digitalization within the enterprise segments, SMEs, etc. And so you're seeing a couple of tailwinds. Historically, I would argue that business owners are very shrewd. So it's not that they don't understand the value proposition of SaaS products and these sorts of digitalization products. What it oftentimes comes down to is a discomfort with some of the change, because a lot of the products, the alternative would be to hire another person.
Yeah.
They understand hiring. They know it. They know the HR function. Labor is relatively cheap for the most part throughout the markets in this part of the world. And so why not just hire somebody? Why do we need to do something new that we may not necessarily understand? We have to learn something new. There's a discomfort oftentimes with that. But silver lining out of the pandemic was that companies were forced to adopt to survive. And so one of the biggest psychological barrier has already been overcome, that they can and they have, right? And so the barriers still exist, but they become shorter and shorter and shorter if we wanted to do like some sort of visualization of this. Additional tailwind that's helping drive it is that when you look at a lot of the businesses here, many of them are family run. And so what's happening in a lot of them, not necessarily all, but in a lot of them, you're starting to see generational transitions.
Yes.
Where the person at the helm has now reached their 70s or 80s or maybe beyond, and is now passing down the reins to a younger generation within the family. And so that person is much more digitally savvy, much more interested in making their mark on the business. Obviously, generalization, not applicable to everyone, but it's happening in quite a few places. And so that person wants to make a mark, is much more open to how can we drive efficiencies, how can we do this, that, and the other.
And make it more scalable.
Exactly.
Have lots of humans who are complex.
Exactly. And then we have another aspect going on at the same time, which the largest part of the population tree, of the population across all of the region, is the population that is either just entered or about to enter the workforce. Yeah. And so these are all digitally native persons that have grown up with cell phones in their hand. Yeah. They understand technology. They're frequent orders on e-commerce and all of this. It's part of their day-to-day lives. So when they enter the workforce, they're going to anticipate that the same level of digitalization that's in their personal life is in the business life. And so they're going to be an additional pushing factor that'll help drive some of the adoption of technology in enterprise. At least that's my hypothesis. I think that those three factors are going to end up advancing this part of the world.
I agree. I think all of them combined together, really. And I've seen that pandemic acceleration as well. So before the pandemic, I was selling HR tech to companies in APAC. Mm-hmm. And there was a very slow, it's not broken.
Sure.
We'll kind of stick it as it is. 100 recruiters, but as soon as that pandemic hit, they were like, okay, we need to speed up. How do we do this at home? How do we do this online? Yep. How can we not meet people face to face? And a big shift. And then from the family side, my wife's family, they have a construction company, and the father is
passing it down,
more or less retired, plays golf all the time, and occasionally goes for a meeting.
Right? Yeah.
So the children, the daughters, are all running the business. And pandemic hit. Oh God, how do we work? So they invested in 365.
Yeah,
and I would be 365. Like, guys, come on. But then they started to actually be forced to make those changes, not just because of the pandemic, but also because now they were able to make those changes. They no longer had to wait for their father to do it.
Yeah.
And then I have a business colleague, a guy called Ninja. They have a foods company. He came from consultancy and has gone into the family business. And is taking over from the father and doing the same. So
a lot of examples along the same lines.
Yeah. I'm seeing exactly what you're saying in real life. As an investor here in Malaysia, what would be your biggest challenge? Your biggest challenge to just being an investor here? Is it could be in terms of raising capital, it could even just be finding the right startups and the right level. What would be your biggest challenge?
Well, there was challenges in getting set up in the first place, and that was a bit of challenge, to be perfectly honest with you. Getting the legal permissions to stay, getting my visa requirements taken care of under my own company was a bit of a challenge. That's fortunately water under the bridge, and now I can relax a little bit. But certainly something that needs to be fixed for the advancement of the ecosystem in the future to bring more players in. Aside from that, if I go out and I try and lure capital to invest into Malaysia is still, venture capital is a niche investment area. Even investors that are very interested into it, it's a relatively small fraction of a total portfolio. And so then couple onto it a specific country with a specific angle of B2B. Now I'm a niche within a niche.
Yeah.
And so there is certainly a challenge related to that. And so it's not easy in order to say, hey, I'm solely focused on a market that's overlooked. It's overlooked. And so people want to go into the hype. Oftentimes they want to go into something familiar, or they want to go into the region so that they have broader options. And so that's definitely a big challenge. I think that that's not insurmountable, because one of the aspects is proving the hypothesis and demonstrating results. So if I come back out to market and say, look, I'm 3x, 5x, whatever, and I start being able to distribute capital back to investors, that starts changing the dynamic. So in the long term, it's more of a branding and positioning and results-driven approach that needs to solve that problem over time. As far as finding deals, I don't think it's necessarily that extremely difficult here. Maybe I'm a little bit biased because there's not a crowded market space, and so it's a lot easier to get the attention of founders, because I'm not in it's not like a loud voice in a crowded room. Sort of scenario.
Is it the other way around?
There's a lot of inflow. Not everything fits the thesis. Not everything fits what I'm looking for. And to be honest with you, in the VC space, you say no way more times than you say yes. It's just the way that it ends up going, because you listen to 50 or 100 pitches in order to find one. The odds are when companies go out to raise, they need to do the rounds and do quite a lot of pitching. But I think here in Malaysia, if I was to venture an argument, I'd say that we may be short on volume that we produce of startups, but we're pretty high on quality. Not to say that there's not ones that don't think are going to end up failing, but we do have some very high quality, which provides for a good environment for a player like myself.
Yeah. It's really good to hear, because I haven't really done too much networking in the startup eco space, and it's great to hear from someone like yourself talking about the quality. I think Malaysia is a fantastic place to build a startup. I've done it myself. I didn't have too many difficulties setting up the company, but I had the same issues around visas.
It's not as easy as advertised.
Yeah, I married my way out of the problem. not on purpose.
I already had one when I moved in, so
So what do you think? People who are going to be listening to this are probably going to be interested in how they can raise, and there's tons of advice online about what you should do, and I'm not going to get you to kind of repeat those messages. But what do you think would be the biggest challenge for a startup looking to fundraise in Malaysia?
So the most difficult part is just being able to find who fits. And so there is a lack. So if you're in the early stage, there is a lack of a sufficient number of investors. I can't lie about that. And the challenge is that investors are run by individuals, and individuals have different viewpoints on where the opportunities are. If you looked at any successful investor out there, they've all said no to a unicorn. When you look at some of the long-standing ones, some of them will even publish the anti-portfolio, the companies that they've said no to that became big, because all of it is driven by individual perceptions and all of this. It's not an exact science. Good companies get said no to all the time. It doesn't mean anything bad about them. It just means that individual or that firm didn't see what the founder saw. Maybe it was because of the pitch, maybe it was because of other things, but Airbnb got said no to, Facebook got said no to. I can go through the list of every single company in the planet. Everybody got said no to at some point. We're in Malaysia, Grab got said no to a number of times. Carson got said no to. I heard when he raised his seed round, he talked to 60 investors only to get one.
No.
And so you will end up hearing more no's than yeses. So there's an aspect of not getting discouraged, not taking it badly. Sometimes a no today could be a yes tomorrow. So building those relationships, demonstrating the capacity in order to, even if somebody says no, set up a newsletter, give them monthly updates. Maybe they'll come back around. there's a lot of those sort of like relationship building, because if others are analyzing in a similar way as me, it's very people oriented, and the best way to win somebody over is demonstrating that you're an amazing person, and you do that by demonstrating all of these like structural components of processes to put in place of informing progress, updating, touching base from time to time. Treat it like an enterprise sales funnel.
Yeah. I think some people forget that fundraising is still sales. Like you're selling your ideas and yourself.
Right.
And you also have to treat it like sales. You got to do lead generation.
Right.
You're going to have a low close rate, and especially at the beginning. And your pitches, your proposals, and
I would caveat that you do see in some other markets that it's being looked at as like as a business function, which is perfectly fine. It should be a structured approach, but I wouldn't outsource it. And so I've had early stage companies that have, an iBanker or some outsourced person coming to me. Generally not the best approach at the early stage. If you're like pre-IPO or any of that, then that's much more acceptable, because you're going to go out and raise 200 million. Okay, well that's a different ball game. But if you're raising that amount, like, it's an entirely people-driven decision oftentimes. So if you take the person out of the equation, it just doesn't help the case. There are automations in regards to like utilizing a CRM tool, so you could do a drip campaign with the newsletter updates, like I said. So you can automate layers to limit the amount of time required. If you have good reporting on metrics, you can do automations to where some of the ones that you're okay with sharing can end up being shared out in those same sort of touch points and all of that. You can set up reminders so that you can touch base every so often, and all of those sort of things that can make it a little bit easier. There's a number of tools that'll get you like databases on who investors are, so you can cold call, you can reach out, you can end up scouring your network to see who can connect you with who. There's a number of
and those aren't so expensive either. Like, you spend a couple of $100 and you've got something like Lemlist, for example, to do your email sequences. You get access to email addresses relatively easy. You can scrape LinkedIn like that.
And generally speaking, most people's email addresses are, first name, last initial, first name dot last name. Like, you can end up kind of figuring it out, what gets bounced back and what doesn't. So like, if you're trying to figure out how to cold call somebody, there's a lot of ways by email. If you're trying to connect with somebody otherwise, warm introductions are great, because it's like it's a bit of social proof if somebody's willing to recommend. And so it's always advisable to try and go through your LinkedIn. Who do I have a second degree connection with? Those sort of activities. And there's layers of automation to help you try and there's tools and things that'll help you map that.
And I think from the referral standpoint, so I've been thinking, like, when we start to fundraise for a few of the startups that we're launching, I'm going for that referral. Like, I have quite a healthy network. I've invested a lot of time in building my network, and then you get referred. We've got a product called Gen C we're going to be launching soon, and I just spoke to a friend who's very well connected. He's in private equity, and he introduced me to the co-founder of, well, actually I probably shouldn't say, but some interesting people very quickly, and that has so much power, like, because then you're in the door, you can talk. And when you can talk, then you can show you.
Exactly. It's always best to see who you can get connected with. The cold call is kind of the last option. Not a bad option. I know people that have raised by taking that route, so it's viable. But it's a lower probability tactic than getting a warm introduction.
I mean, it's the same in any industry. But
exactly.
Referrals, in intros. Always the highest.
It works the same as enterprise sales when it comes down to it. Am I going to buy your product? Your product is you and the company. Now structure the process in order to get in front of people.
I think that's what some people forget. They get so focused on features and benefits, right, of their product. Especially at that early stage. Well, you could have an idea of what your features and benefits today. You start selling it to your customers, and your customers go, I need this, I need this, I need this. And it evolved, like you said at the beginning of this conversation, that the product will be different in 5 years' time.
And I mean, like, when you look at it, there's an interesting aspect when you see somebody that puts in that sort of work into the process. It makes a difference. Somebody that puts that thoughtful touch of being able to have pre-qualified you coming in and then being able to do talking points that is related to why is what I'm selling, the company that I'm building and wanting you to invest in, related to things that you're interested in. If I did my research on you, then I can be like, okay, well, I know that you're interested in this. You've done something in this space.
It's the same in sales. If you're not doing any form of research, it feels automated. It feels generic.
Yeah.
Right. So you were talking earlier about that gap, that early stage where there's a gap, and unless you know high net worth individuals who can write you a nice check, you're going to struggle because there's not many guys like yourself.
Sure.
What do you think like Malaysia or Malaysian government and all of these different agencies they have could do to kind of change that? Do you think there's anything that they should be doing, or do you think it should be all private?
So I think that there's definitely things that they could do. I would start off by saying that across the globe, a general theme is that governments are not very good at being investors in early stage companies. There's just too many of them that they need to deal with, that it's better in order to get a multiplier effect by helping seed smaller funds that would then go out and raise additional to match that or compound. And so that to me is a much better route. Governments can do a pretty good job. There's many sovereign wealth funds. There's many other entities within those, the pensions, et cetera, that have a lot of expertise at the later stage. When you start getting later stage privately held companies, the type of analysis that you need to do in order to understand it is much more similar to a public company. But when you're talking about early stage, it's not very similar because you don't have data, you don't have all of this. You have to do a completely different type of analysis in order to understand the opportunity.
Yeah.
And so there's a different skill set that's required. And so there needs to be a different approach. And so it's perfectly fine if those entities want to come in at the later stage, but it's better in order to do kind of a fund to funds approach and be able to seed and incubate more funds to be interested in investing in Malaysia. I think one of the things that's important as well on the same topic is that we shouldn't be focused about the fund domicile being in Malaysia, because ultimately the goal ought to be more foreign capital being paired up with domestic capital. That's the critical success factor, is being able to pair domestic with foreign. This is what many other countries have done. Singapore has done it, Indonesia has done it. When you start looking at the mix, there's a mix of domestic and foreign. And the domicile is actually a restraining factor, because the domicile of the fund, generally speaking, there's really only like 5 destinations where capital is comfortable with going. It's a Singapore, it's a Delaware, US, it's a Cayman, it's a British Virgin Islands. It used to be Hong Kong, but because of geopolitics, that's become a little bit of a question. Yeah, unfortunately. I do like Hong Kong, so don't get me wrong. But, and then I guess, Mauritius maybe? If you're in Europe, then maybe some of the islands around the UK, they've got a ton of we need to look at getting a diverse pool of capital. We can't just put capital into 2 funds and say it's the end of the day, because again, individuals have their mindsets. And so if we don't have a broader range of investor mindsets, if we don't have a broader range of funds, if we just have a couple of generalists, we need some specialists, we need a diverse pool of VCs. We need more VCs. And we need to make it easier for VCs to set up here. In order for the individual, the visa process, even though their fund may be somewhere else, to have people on the ground. The more people on the ground, the more that there is people looking for opportunities. And so that's on the structural aspect. Summarize succinctly, get rid of the domicile consideration, focus on getting more pooling of capital, and fund more VCs. Like Singapore did.
Don't try and do it direct to the start yourself, but
go the fund to funds approach. Leverage the expertise of fund managers. This is what they do. They focus on it. The Malaysia market is still relatively nascent, so my preference for what they ought to do is go a little less on the funds that do more of the spray and pray approach, where it's these massively diversified portfolios, and go a little bit more on the hybrid or concentrated portfolios, because in those, generally the fund manager is going to be a much more value add to the companies that they're investing in. And because the ecosystem is early, most of the founders that are here need more value add. than otherwise. If they fell into the bucket of like, you can't manage 50 companies very effectively. It's very difficult unless you have a very large headcount.
Yeah.
And another point to add on to it is that we shouldn't focus so heavily on the later stage. Later stage, we should have some level of focus, but later stage, the larger the amount of money that you're raising, the more likely capital is global. If an investor has $20 million to invest, they can invest it anywhere around the world. That's a large enough sum to where you can basically say they have access and visibility to many places. And so any company at that stage is competing globally. Focusing on setting up any domestic entity is not necessarily a solution in the long term towards that end. It's always good to have more activity, more investors here. We have private equity firms. We have many of these different things. So it's not necessarily a negative, but we need to not focus all of the efforts on the wrong segment. The biggest aspect is we need to be able to get enough top of funnel. And so there's a natural failure rate of startups. From the beginning to being able to get big, there's failure along it. And so we need to be able to fill enough top of funnel because Malaysia is just not producing enough volume. We produce good quality, don't get me wrong, that's why I'm here. But we don't produce enough volume. So we need more activity at the earliest stages, and we need more of that fund-to-funds approach to be at the early stage.
So it kind of needs to be also looking at education then as well, like
awesome.
Entrepreneurs helping people become entrepreneurs. Yeah. In fact, many years ago, the college that I went to, this is before university, college in the UK, they had a small incubator where they gave you just a little office space in the college and introduced you to people to try and do business and sell your product. And like little things like that just encouraged young people to start.
I think we need to normalize the risk associated with startup, and that failure is not necessarily end of life. It's part of it. If you're not failing, you're not innovating.
Yeah.
And economies thrive on innovation. So if you want to produce outsized outcomes, you kind of have to. There is a very positive in regards to the efforts in education because it's very heavily emphasized, education across Asia Pacific. They've done a good job of introducing more STEM education. I've engaged on a number of occasions with a wide variety of universities here, and I'm hoping that we'll end up having much more engagements going forward, maybe run some programs. We'll see what the future ends up holding. But I do think that to me, the critical aspect is that early stage. So touch points at university, getting more accelerators. Me and my partners have relaunched Founder Institute in Malaysia. We have the Indelible Ventures. We're looking at doing more things at that kind of top of funnel early stage investing because it's a numbers game. You need to get high volume at that early stage in order to produce the very large companies because that funnel narrows as it comes down.
80% of businesses in the US that start like small businesses fail. 80% of the 20% fail the second 5 years. So there's a huge fail rate. So I completely agree with that top of funnel. I've actually been thinking about trying to go into schools here as well and kind of something we were thinking about doing was an academy to kind of encourage people to come and work at Nectar and build a good funnel, but at the same time kind of making people think there's different routes to take in life. So I think we're both on the same page, just trying to do things like that. I think that would be really cool for Malaysia. Founding Institute though, obviously how I originally came across you was because of the Founding Institute. So I'm actually signing up to join. I'm really excited to do it. Maybe you could tell people a little bit about it. There's probably some listeners who are going through their startup journey. Maybe you can share.
Yeah. So Founder Institute is based out of Silicon Valley, but it's basically across the entire globe. I think they're in like 90 something countries. So like really across the globe. So every location has basically their local chapter. And so we're managing for Malaysia right now. Essentially what it is, it's a pre-seed accelerator. And so it focuses on that kind of early stage. We have two tracks, the launch track and the growth track, really based upon what the needs of the company that ends up joining it is. And it's not, I'm not going to lie, it's not an easy program. We try and be tough on the companies because building a startup is hard. If we're going to run a program aimed at accelerating that business, we have to be hard. There's no other way around it. And so we have a lot of tasks and requirements associated with building the business week by week by week. We work on the pitching, we work on all the corners of the business in order to, at the end of it, be capable of arranging demo days and investor introductions so that that next stage we can launch you off and see some success out of the companies. And so we're getting ready to launch our new cohort. So that's going to be officially starting May 3rd, I believe, is the orientation. Yeah. And then, our intention is to keep on running cohorts because like I said, my reason for launching it was because I recognize that top of funnel problem that we're not producing enough volume and we need higher touch points so that we're giving value add to the entrepreneurs and giving them an option and the advice, the mentorship, and the global network that Founder Institute comes with.
Yeah, it's a really exciting opportunity for anyone to get involved. I know that there's a cost to it, but it's a very low cost. Like it's not a. I feel like there's a price more for getting skin in the game, right?
Yeah. There's an aspect of making sure that somebody has a little bit of skin in the game in order to ensure that effort. Kind of along the lines of what you were talking about getting a business coach. You put a little bit of money into it. Now you make sure that you have that extra incentivization in order to make the most out of it, right? And so it's not a meaningful amount. Like if you took a university course, it would be multiples of the value over the same. It's a 14-week course. If you put it onto a week by week basis, you're talking about coffee bill. We're looking forward to it, and we're looking forward to be turning this into a mainstay, a flagship in Malaysia.
Yeah, that'd be awesome. So let's if we were to give sort of one piece of advice to a founder, what would you give them?
That's really difficult because I asked this question to a lot of founders as well. So I listen to other founders saying it. So it's a real tough one. But if I had to boil it down to one, and I'm gonna do it not on the aspect of fundraising or anything like this. It's more of if you're just getting started off, you need to have a passion about what you're doing.
Yes.
If you do not have that, you are not going to endure all of the difficulties, the roller coaster ride. At some point, every successful company has had a near-death experience where you're a couple of days away from being without any cash. You haven't closed. You have past due receivables. A client hasn't paid you. You're wondering, how am I going to pay payroll? All of these challenges. In the middle of the night, stuff can break. Are you going to wake up at 3 a.m., get on your laptop and start coding in order to fix whatever happened? It's incredibly tough. You don't always capture those difficulties when you're reading the highlights of companies, but it is incredibly tough. So if you don't have that strong drive, that passion about what you're doing, the problem that you're solving, the market, whatever, it's going to be very difficult to endure. Now, mind you, if you're a second or third time founder, it changes a little bit because there's more of there's the been there, done that. So the level of passion kind of the requirement kind of changes because you've already been through it. Maybe you're the type that thrives in chaos. Yeah. There's always it's always interesting to meet a founder that once the company got B round or C round, they're I'll sit on the board, but the fun stuff is no longer there. So then they start something else up because they just love the chaos of the beginning. There's an innate characteristic about that. So you need to have that strong push because it is not easy. There's no way to sugarcoat it. It's not easy, but it is very rewarding.
I think it's probably the most rewarding and exciting, painful experience I ever went through in my life. Like I was saying, and I completely agree with that passion. So, I started Nectar because I was passionate about sales and selling and helping companies grow and creating growth. And then going through that, because I remained passionate about what I did, I was still excited during the bad days. And I've seen friends who are just trying to make money and they've started e-commerce businesses and different things like that. And it's not worked out quickly or it's been challenging and they've given up because they don't care. They just want to make money. And I think if you're getting in it for just to make money, of course you're starting business because you want to make money. Let's not pretend that you're not. Yeah. But if that's one of the main drivers, don't bother.
Yeah, I mean, how many startup founders make a salary in the first year or in the second year? I mean,
Yeah.
you can't go into it so easily about just trying to be solely money oriented, because oftentimes it's just not there in the beginning. There's a history with most ecosystems where they kind of start off with that kind of archetype of startup founder to where they don't have those worries because they can take the risk. But as ecosystems develop, you start reaching into different sorts of categories of individuals. And I gotta be honest with you, like, there is an aspect of people perform better when their back is against the wall.
Yes.
And so, like, I like the scrappy person that pulled themselves up from nothing and now has accomplished something and has that motivation because, like, they have it built in their head. I'm never going back. Yeah. And so, like, there's an interesting, like, grit and durability out of somebody that has that.
So important. I always say that when my back is against the wall, I do my best work.
Yeah.
When I started Nectar with Bcor at the time, it's kind of crazy. I had just bought a house, so I suddenly had a mortgage, and then I quit my job, and I didn't get paid for. I was able to in the first year start a salary, but I think it was 9 months. But yeah, that was scary because I was like, shit, what am I doing? Now I have like this huge walloping debt that I've got to deal with.
Similar for me. I mean, striking out on my own, it's a similar sort of scenario. I'm not going to be pulling a salary for a bit of time. I've got little ones, so that's a hard consideration to be looking at the family and saying, okay, I'll take the plunge.
Yeah, good. We're in it together. But if you've got a good support matrix around you, you know, that really does help. If you've got a supportive family, supportive people, even if they can't support with money, but just like giving you a break when you need it, you know.
Absolutely. I mean, every founder needs like a support network because even if you have that strong mental toughness, that sort of grit, you need some release at some point in time. You need to have friends, family, something, a hobby, some way of like getting that release. Yeah. Different people, different things. There's no one size fits all for what that means, but there needs to be something there for the individual's own mental health.
I mean, exercise is probably a really good way to deal with it. I was going through a very stressful time about a year ago. I was very, very concerned about the business. And so, you know, a lot of sleepless nights and things like that. Yeah. And so I would, about 5 a.m., I would go for a run. And it would be that about 1 hour of my day where I wasn't stressed. And that changed everything for me. Without that, I probably would have collapsed. And I think, you need those outlets for sure.
I kind of feel like I like running in the morning. Presumably the people that are born and raised here are much more accustomed to it. But like me growing up in a completely different place, I'm used to the sun kind of rising a little bit earlier in the morning. So going out for like a 5 or 6 a.m. run, you're in the pitch black darkness. And the sun doesn't rise by the time you're finished.
No, but
it's quite nice though. They'll give you wrong because it's cool. It's cool and it's peaceful. You don't have so many other people to deal with.
Exactly. Well, Kevin, it's been a really, really interesting talk. I've learned a lot for myself. I hope our listeners have as well. As someone who's going to be going out fundraising and thinking about that, like. I've learned a little bit more about the ecosystem and that's been really, really helpful. Thank you so much.
Yeah. It's been a pleasure. And hopefully through the Founder Institute program, you can learn a whole lot more. And anyone listening should be signing up as well.
Definitely. Thank you very much.
Yeah, pleasure.